Welcome back, dear traders. Wall Street welcomed long-anticipated news from Jerome Powell yesterday. Apparently, stock investors were encouraged by the comments from the Fed chairman on further policy moves. As a result, the Dow Jones surged by more than 700 points intraday, or more than 2%. The Nasdaq showed the strongest performance with its intraday gain of 4.4%. All in all, the index of the high-tech sector grew by 3% for the whole month. The Dow Jones and the S&P 500 closed the last month with the more impressive results, having jumped by more than 4%. The S&P 500 received a technical boost yesterday in response to the comments by Fed Chair Jerome Powell, who dropped a hint about a possible moderation in the pace of rate hikes. His words dropped on the fertile soil which had been previously cultivated by analysts, speculators, traders, and other Fed policymakers. So the markets set their priorities on the grounds of the risk appetite. In consequence, the S&P 500 leapt by 3.2% and set its own record in intraday growth since May 2020. The main barometer of the US stock market traded higher in the New York pre-market today. It has climbed to 4,082 points. Nevertheless, some experts reckon that such a stunning weekly rally in the stock and the bond markets is doomed to failure, like it has happened a few times in 2022. All in all, the S&P 500 has slumped by 14.4% for the last 11 months. Notably, its ongoing growth since the lows of October until late November has measured almost 14%. In his speech yesterday, Jerome Powell said the time for moderating the pace of rate increases may come as soon as the December meeting. On top of that, the Fed's leader also reminded that ultimate levels of interest rate would be higher than expected. And we will stay the course until the job is done, Powell added. In other words, interest rates should be put on a halt at high levels until inflation is brought down to the safe level of 2%. The question is how long interest rates should be increased to stem inflation. Thus, forecasts of Fed's interest rates are still considered cautious because the ghost of a recession in the United States is still on the horizon. The truth is that further inflation prospects uncertain, the chairman concluded. The markets took notice of that inflation, which they wanted to hear, neglecting the actual content of the speech. As Powell's comments were viewed as dovish, the US dollar slumped in response. Eventually, its index took the sharpest intraday nosedive in the last 15 weeks. At the same time, the S&P 500 jumped within its narrow corridor. Today, the US dollar is extending its retreat, awaiting the PCE price index, which is due tonight. The US Fed gives this indicator a top priority. A month ago, on November 10, even a downtick in the PCE price index sent the US dollar in a downward spiral, but the S&P 500 developed an incredible rally of 5.5%. Another high-impact event for Wall Street is the non-farm payrolls for November, which are due tomorrow. Meanwhile, the US dollar had to give in to Wall Street bulls. Its index dropped to 105.07, sticking to the lower border within the intraday corridor between 104.90 and 105.90. Personal spending in the US grew by 0.8% in October onwards from 0.6% in the previous months, in line with the market expectations. The data still proves robust consumer spending, encouraged by the tight labor market and the solid savings despite rampant inflation and the higher borrowing costs. In a separate report, the PCE price index came out to be lowest in 2022. Its reading in October declined to 6% from 6.2 in September. The core PCE also went down to 5% in October from 5.2% a month ago. Hence, the market found another argument for Fed's softer monetary policy. Such prospects are bearish for the US dollar at least until tomorrow, until the release of the government data on the labor market. Other major currencies are taking advantage of the situation. The same is true about the Canadian dollar. Yesterday, oil prices surged by 3% in light of the news that Beijing relaxed lockdown measures in some regions. Mass protests earlier this week fueled social anxiety in China. Economic jitters put logistic chains in jeopardy. However, the situation is getting better, thus the USD cut pair traded higher in the early American session within the intraday corridor between 1.3396 and 1.3451. Bitcoin is also eager to consolidate its gains. The flagship crypto cannot find support from the US dollar's weakness. The token is still wound down by the fallout of the crash of the FTX crypto exchange. No wonder recovery looks complicated. On the plus side, demand for Bitcoin has been rising for the last week among all categories of crypto investors, ranging from crypto, shrimp to whales. In the New York session, Bitcoin is consolidating in the corridor between 16,703 and 17,335 points. The token is trading at about 17,000 at the time of recording this video. And you've watched the first winter review of the North American session on InstaForex TV channel. Keep close tabs on the global financial markets with the InstaForex analysts. All your comments are appreciated. See you online tomorrow.